Welcome to Crypto Intel headquarters. I'm Elena Volkov. Before we get started, make sure you're subscribed to this channel for weekly crypto intelligence that actually keeps you ahead. As always, this channel is not financial advice. Use your own research when picking out tokens. Let's get started. Bitcoin just took a serious hit. Over the last week, Bitcoin has fallen roughly 13%, dropping from the mid-$70,000 range all the way down into the $66,000 to $67,000 area. That's one of the sharpest pullbacks we've seen in months, and investors are now asking the same question. Is this just a correction, or is something bigger happening? Let's break it down. One of the biggest surprises came from Strategy, formerly known as MicroStrategy. For years, Strategy has been known as one of Bitcoin's biggest supporters. The company has spent billions buying Bitcoin and has become almost synonymous with the asset itself. That's why investors were shocked when Strategy disclosed that it sold some Bitcoin. Now, before everyone panics, let's put this into perspective. The company only sold 32 Bitcoin. That's a tiny amount compared to the more than 840,000 Bitcoin it still owns. But the market didn't focus on the size of the sale. The market focused on the symbolism. This was the first time in years that investors saw Strategy reduce its Bitcoin holdings. Even though the sale was small, it created fear that one of Bitcoin's biggest believers might be changing its approach. At the same time, another major problem appeared. Money started leaving Bitcoin ETFs. Over the last several weeks, billions of dollars have flowed out of spot Bitcoin ETFs. One day alone saw nearly $500 million leave the sector. That's important because ETF demand has been one of the biggest drivers of Bitcoin's rise over the last 2 years. When ETF money is flowing in, Bitcoin often rises. When ETF money starts flowing out, it can create additional selling pressure. Now, some analysts say investors are overreacting. They point out that Bitcoin ETFs still hold enormous amounts of assets and have attracted tens of billions of dollars since launching. But right now, the market is focused on what is happening today, not what happened last year. And today, the flows are negative. Then came another headline that scared investors. Mt. Gox. If you've been in crypto for a long time, you probably know that name. Mt. Gox was once the largest Bitcoin exchange in the world before collapsing after a massive hack back in 2014. This week, wallets connected to Mt. Gox moved hundreds of millions of dollars worth of Bitcoin. Whenever that happens, traders immediately get nervous. The reason is simple. Many creditors are still waiting to receive Bitcoin that has been locked up for years. Some investors worry that once those coins are distributed, recipients could decide to sell. Even if only a portion gets sold, that's still a significant amount of Bitcoin potentially entering the market. And then there's the geopolitical situation. Tensions involving Iran, Israel, and the United States have increased uncertainty across financial markets. Whenever investors become nervous about global events, risk assets often suffer. That includes cryptocurrencies. The combination of ETF outflows, Mt. Gox fears, geopolitical tensions, and overall market uncertainty created the perfect storm for Bitcoin's recent decline. So the big question is, can Bitcoin go lower? The honest answer is yes, it absolutely can. If fear continues spreading through the market, Bitcoin could test lower support levels. Many traders are watching the $65,000 area closely. If that level breaks, some analysts believe Bitcoin could temporarily move into the low $50,000 before finding stronger support. However, there's another side to the story. Despite this sell-off, the long-term picture hasn't completely changed. Major institutions still own massive amounts of Bitcoin. Spot ETFs still exist. Governments around the world continue developing crypto regulations, and Bitcoin remains one of the most widely adopted digital assets on the planet. That's why many long-term investors view pullbacks differently than short-term traders. While traders focus on today's price action, long-term investors often focus on where Bitcoin could be years from now. So what should investors watch next? Number 1. ETF flows. If money starts returning to Bitcoin ETFs, that could provide support. Number 2. Mt. Gox distributions. The market wants clarity on how much Bitcoin may actually reach exchanges. Number 3. Geopolitical developments. Any major escalation could increase volatility across all financial markets. And number 4. Support levels. If Bitcoin can stabilize around current prices, confidence may slowly return. But if support breaks, more downside could be possible. For now, Bitcoin is sitting at a critical point. Bulls are trying to defend support, bears are trying to push prices lower. And the next few weeks could determine whether this is simply a healthy correction or the start of a deeper pullback. One thing is certain. The crypto market is reminding everyone once again that volatility is part of the game. As always, this is not financial advice. This is for informational purposes only. Do your own research before making any decisions. If you want to stay ahead of moves like this before they become obvious, make sure you're subscribed to this channel for weekly crypto intelligence. Thanks for watching and have a good night.